it's Ginny Faye with Real Estate One, and I'm here again with Ben Williams from Benchmark Mortgage, my favorite mortgage guy, but because he knows everything, so that's what we're going to talk about today. I have two subjects for you today.
Okay.
One is, what is the difference between pre-qualification and pre-approval? Many buyers are totally in the dark and don't understand.
Well, I think many buyers, plus when I was an agent, I was a little bit in the dark as well. It's such a confusing topic for a lot of people. What is pre-qualification? What is pre-approval? Well, pre-qualification is something that says, Mr. Buyer gives me this information, and based on his word, based on his income that he tells me and everything, and he tells me that he's got excellent credit. Well, okay, well, based on all that, I believe I can pre-qualify you for $300,000. Now, pre-approval is when a buyer gives the loan officer or lender all the information that's needed to verify, like bank statements, tax returns, W-2s, stuff like that, and then we're going to pull a credit. Based on the third-party verification of all the information that he's given us verbally, we're able to then, okay, based on this, we can pre-approve you for this amount. Pre-qual is kind of like, taking you for your word and going with it. Pre-approval is something you definitely want to have in your back pocket when you're out there shopping around and you're making those solid offers to purchase a house.
Well, I know myself as a realtor, I want to see that pre-approval letter before I submit an offer. A pre-qual letter I'm not going to take. I want a pre-approval letter because I want to show my sellers that, hey, they really can buy this house.
Exactly.
Okay.
I mean, especially in a competitive market like this, the last thing you want to do is get an accepted offer from a pre-qualified buyer.
Right.
And then, a few days down the road, oops, he's not really pre-approval.
Yeah.
So it really hurts a lot of different people. It not only hurts the seller, but it also hurts the agents. There's a lot of trust built in
right.
with the real estate community, and when somebody gives you this information and you bring it to your seller, when buyer's agent brings it to the seller's agent and that seller takes it to his client and that person really isn't pre-approved, it can really put a damper on the relation between the seller and the seller's agent.
That's right. Absolutely.
So it's very, very important. And good listing agents like yourself, is like you said, I always ask for pre-approval, and that's the primary reason why. You don't want to waste anybody's time with just a pre-qualification letter. You can go online and download any letter and get a pre-qualification with no problem.
Yeah.
So,
okay. Second question I have for you is regarding points. Because many people hear about, oh my gosh, I have to pay points in order to get this mortgage. Well, when I was in lending, I knew what points were and I could explain it. But I think things have changed and some of the laws have changed and so on since then, because I've been out of it for over 12 years.
right.
So tell me about points and how much are they and what do they do for the client?
Well, they're, without getting too much in the weeds of everything. So when the lender's looking at information, he's from the buyer, he's looking at credit score and income and debt to income ratio and stuff like this. Also, the lender is going to write a loan based on what the Federal Reserve has set the interest rates for. So we have, as lenders, we're being charged a fee that we have to keep in lockstep with the Federal Reserve.
Right.
So there's a factor, what they call loan level price adjustment. So if a buyer has a credit score, say under 720, there's extra fees that are tacked on to that interest rate that a buyer wants to get. So when, say for instance, a buyer has a credit score that's say 680, well, there's going to be another point or so added to the fee to buy that interest rate. So if a buyer wants a lower interest rate, then that's going to cost more for the lender by the Federal Reserve. So in that situation, if a buyer wants say a 7% interest rate and they got a 680, well, we're going to have to charge a point to get that particular rate that we
Buy it
can
down.
buy it down. Now, sometimes a buyer says, you know what, I don't want to be charged a point. It just looks bad. I just think you guys are out to get me or whatever it is. You know,
I know.
there's always that little voice in the back of a lot of people's heads. So if you don't want to be charged a point, well, be prepared that you're going to be charged a higher interest rate because that's what the lender can afford without charging a point to the buyer.
Right.
What I've also been recommending is that whole saying where you date the rate, you marry the home.
Yep.
So, you know, if you don't want to be charged that extra point in origination points, go ahead and lock yourself into that higher interest rate, okay? Because after you make 6 payments, you can refi that loan into a lower interest rate once those rates come back down.
True. But the other point is, I think a lot of people don't realize is if you do pay points, you can write that off on your taxes.
That's a really good point, and I completely spaced that one, but you're absolutely correct. So if you want that lower interest rate, and that can be, it probably is upwards of $100+ a month between the lower interest rate and the higher interest rate. If the lender does charge you points, that's a deduction that you can write off when you get ready to do your taxes next year.
Right.
So that's something to keep in mind. So those are different factors, and you always have to make the best decision for you, not what everybody else is doing.
Right.
So whatever your financial situation dictates, make it for yourself and not for what most of the people are doing out there, because having that extra $100 a month could be a big difference in
That's
somebody's paycheck, and it could affect your debt to income ratio too.
All right.
So
plus, I know what Ben is going to do is when you're going to write an offer, and he may have already gotten you pre-approved, but it could be a month sent before you find your house. He's going to rewrite everything to make sure that you still qualify, because rates change all the time.
Rates change all the time, and that's something that, and you probably did the same thing when you were a lender, is, when you're out there house hunting, get your pre-approval letter first, okay? That's good for, it can be 90 or 60 or 90 or 6 months, whatever it is. I usually go 90 days because it's hard to foresee the future. But get that pre-approval and get it locked in, and then when you find that house with your pre-approval letter, have your lender run the numbers for you. And what I mean by run the numbers for you, there's a lot of variables that come into play with that. What's the interest rate at? Oh, by the way, is the taxes different in this part of town versus that part of town?
That's homeowners association.
Homeowners association. So there's so many different factors that can affect your monthly mortgage payment, and that's why if you're working closely with your lender and your realtor, you'll be able to come out ahead in the long run too. And also, when you do find that house that you want to go ahead and purchase, and you get an accepted offer on there, a lender is going to provide you what they call a loan estimate right off the bat. Within 3 days, a lender has to give you a loan estimate. And that loan estimate is going to more than likely have a slightly higher interest rate than what you feel is comfortable. And the reason why it does that is because, like you were saying earlier, the interest rates fluctuate throughout the closing process, and a typical loan can take anywhere between 30 to 45 days to close. And any time during that period, a lender can lock the rate, and it could be, and a lot of times it is, lower than what he initially said you would.
Good.
So, like I said, you date the rate, you marry the home.
I like that. Okay, for all of you that are out there looking for homes and you want to get pre-approved and you want somebody that is really going to have your back and make sure that you understand everything about that mortgage, call Ben.
Thank you
How
very much.
yes, and I totally believe that. How can they get a hold of you?
Well, they can reach me in multiple ways. I receive calls and texts. I love text message because I can quickly respond. And the best way to reach me, either call or text at 231-632-7888, or you can email me at ben.williams@benchmark.us.
Perfect. Okay. And I'm Ginny Fay with Real Estate One. If I can help you with any of your real estate needs, call me. You talk, I listen.